Welcome to the Transparent FX Academy. I'm Nick and I'm a top author and trainee with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the chart. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which is currently testing a quite significant level of previous monthly resistance, which is now turned support. In fact, from here, all this previous rejection to the downside was created, confirming this level as resistance. And now the market has broken above the zone with this impulse and is currently retesting this level as previous resistance turned support from a monthly perspective. From a level like this, we could expect more potential bullish price action to be developed. We can also notice that from a pattern standpoint, we do have an impulse and correction. So in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 50% and 0.618 Fibonacci retracements lining up exactly inside of this area, creating confluence of support inside of this zone from which we could expect a potential reversal to the upside. Dropping down on the weekly time frame, what do we have? Now, from a weekly perspective, we can see how the market has just tested and is currently rejecting exactly the previous weekly low. From here, the market had created a rejection to the upside, then the market melted back down, went for another retest of this exact same level, and currently it is rejecting it to the upside. So in a situation like this, more bullish continuation could be created away from this area for the market to potentially create a new weekly higher high. So also the weekly looks quite bullish. Dropping down on the daily time frame, what do we have? Well, from a daily standpoint, this is where things get very interesting. In fact, we can see that the market just shifted from a bearish trend from a structure point of view to a bullish trend when it comes to the structure. In fact, the market went from creating lower lows and lower highs, therefore from a downtrend, to now creating higher highs and higher lows. The market, in fact, with the creation of this move to the upside, broke above this previous high. So essentially, we now have the low, the high, a higher high. So what we could expect here is a correction in the market to also create a higher low, essentially creating a perfect shift from a bearish trend to a bullish trend. So what this means is that what we could expect in a situation like this is a correction and then to see more potential bullish continuation. Now, when it comes to corrections, what we always have to remember is that in order to measure a correction, what we have to do is take our Fibonacci from the low to the high of the impulse leg, which shows us how we have a 0.32 50% and 0.618 Fibonacci retracement zone, which is currently lining up with this previous level of daily resistance, which is now turned support. So essentially, this means that inside of here, we have confluence of support because we have both the previous resistance turned support from a structure perspective and also the Fibonacci levels, both lining up exactly in this area. So if the market here will provide a correction to this zone, inside of here, we could definitely have the possibility of seeing institutional longing, which at that point would further increase the probabilities of a potential reversal to the upside away from the zone. Now, why am I speaking about institutional longing? Because if we go and see what we have when it comes to the commitment of traders, so what institutions are doing in the market, and we look at the data for gold, we currently do not see any kind of institutional longing so far. Net positions went from having from 193K all the way down to 101K. So even though we still have way more longs than shorts from an institutional perspective, with 226,000 longs compared to only 124,000 shorts, we can see how with the last few reports, hedge funds and institutions were clearly shorting gold and moving to the bearish side. And we don't see yet a shift back to the bullish side here for gold. So we have to be very careful with what is going on. Only if we will start to see once again institutional longing inside of the area, only at that point we would have good probabilities of seeing a reversal to the upside. But given that this is a confluence of support inside of here, this is exactly where we would expect institutions to start once again adding longs, considering that clearly this market is shifting back to the bullish side. So if we do get the break on the retest of this previous resistance turn support and confluence of support, if we see institutional longing, how we could be approaching a potential move higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential move higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to the entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here, past the testimonials, you will see that at the moment there is a massive special promotion in which you have a huge discount on the upfront price of the program from $497 all the way down to only $97 one-time payment. And as an option, since I have partnered with the forex broker Blueberry Markets, if after you join the program you open an account with them, you can get a full refund credited back into your trading account. And if you scroll lower, you will see that at the moment the time to join is almost over, so I really suggest that you go on the website as soon as possible, and directly from here there is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. The link is also in the description and I will see you in it. If you enjoyed the video, make sure to smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next breakdown.